Right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing that I want to talk about is basically the only thing I want to talk about today, and that's market manipulation as usual. But the question is, are futures totally ruining Bitcoin and really aren't good for it at all? And I don't think they are. I never thought that institutional investment was very good. I was a little bit bullish on bakkt, hoping that because it's Bitcoin settled that things would be different, but it's really not. And we can see that with futures brings a better opportunity for manipulation. And I hate to say this because it's almost like a saying, they're after me or they want to do this. And you never really get to the culprits of it. And that's okay, I think, for this conversation. So I'm talking about the whales, of course. And the whales with a lot of money, you can do a lot of things, plain and simple. And I know a lot of people like to blame it, and then the other half are, make fun of the people who do blame the whales. But really, who else is going to be dumping 5,000 Bitcoin at a time and all these different things other than, well, whales? So with futures, you bet on the price of Bitcoin going down or up. So far, there's only been, before bakkt, there's only been fiat-based futures. So you bet with money, and it's basically horse race betting. You're betting with money, you're getting money back. Just because you're betting on the horse race doesn't mean you get the horse in the end, although maybe if you win enough, you can buy it. I don't know. But with bakkt, it's physically settled with Bitcoin. So you get Bitcoin, you put Bitcoin in. When bakkt was coming along, it was denied a whole bunch of times, and then now here we are. So there's an interesting correlation between bakkt future and the price of Bitcoin suddenly. And there was an even bigger correlation between the cboe and the CME group when they came out at the end of 2017. When their futures launched. Now, cboe, I guess recently put in the towel, but CME is still going strong. And at the end of every month, the last Friday of every month is the expiration of Bitcoin futures. And now, why is that important? So first of all, again, you're betting on the price of futures going up or down. And you're buying it at a later date. So you could essentially bet that Bitcoin's going to be $8,000 when it's at $10,000, then take a bunch of your own Bitcoin and dump the market on a whole bunch of exchanges that the CME group or this group or whatever bakkt recognizes. And when all that price goes down, not only did you sell Bitcoin, but you just won the bet, essentially, of futures, and you bought it at a lower price, and you just gained a bunch of money. And now you can buy in with some of that earnings, I guess, and because it's cheaper now, and do it again the next time, and do it bigger the next time. In the same way you can do that with trading. So I'd like to bring this article up first here. CME Group self-certifies Bitcoin futures to launch December 18th. Now, that was all the way back December 1st, 2017, and based in Chicago, the Chicago Mercantile Exchange. And everybody was pretty excited for that because it was like going to be the beginning of institutional investment in Bitcoin. But there was no physically settled Bitcoin futures like bakkt is. It's, again, just essentially betting on the price of Bitcoin going down. It's like in South Park, lopping the head off a chicken and throwing it in and seeing where it lands, and then you get money. In the same way a casino. But that doesn't mean that you couldn't have intentions of betting on the price going up or down and then making the price go up and down with your money. So that was on December 1st, and Bitcoin, they launched December 18th, essentially. Now, December 18th, interestingly enough, if we want to zoom in just a little bit here on this chart, so we can get a better pinpoint, was basically the all-time high of Bitcoin. You could argue December 17th or whatever particular day close to the end there. But December 18th, futures come along and destroys the price of Bitcoin. Really annihilated it. Now, it was going up very quickly, and sooner or later it was probably going to go down. So it was could have been coincidence, but same day and same dump. So, institutional investors could be incentivized, if you will, to start dumping all of their Bitcoin that they may own outside of the institutional investment world, off the record, if you will. And so that worked out pretty well if you did that. Interestingly, I showed a chart. I should have brought it up in this video, but I don't have it on me right now. But there is a chart of CME Group and cboe futures that they picked up other assets over the years, of course, too. They've been around for a while. And when they picked up gold, it sort of dipped. I think they picked up silver and it dipped. They picked up uranium and it dipped right after they picked them up, right after they start offering the futures, which almost makes sense, if you will, because what institutional investor is going to bet on the price of Bitcoin going up? Because why would you? I mean, it doesn't really matter to you. You're only trying to get your money, and it would be better if it went down and you got a bunch of it, especially considering you're just getting cash in the end, essentially as if you sold it. So it makes sense. Like, why go up when going down is essentially easier? And the reason why here is, why is there a disturbing correlation between bakkt futures price and Bitcoin? So Bitcoin tend to be highly volatile investment, of course. As most of you know, Bitcoin's amazing highs of 20,000 and recent lows of 3,400. These price fluctuations are often quick and at times hard to explain. During the past several months, Bitcoin enjoyed a period of relative stability around 10,000. This abruptly came to an end when a project thought to push Bitcoin's price up seemingly did the opposite since the launch of bakkt Bitcoin futures. bakkt Bitcoin futures. I swear I could talk. I won't even edit that out. Bitcoin fell below the 10,000 mark and yet to recover, although it hasn't been that long, to be totally honest. But now, currently, at the time of writing this, it's at 8,400. Now it's even lower than that. Now it's something 8,100. I think it dipped to like 78 for a little while there. And so despite having a launch that could only be considered a flop, bakkt seemingly has a large influence on Bitcoin's price. Despite memes and mocking the empty bakkt trading floors and a very low trading volume, it seems they can still affect the market, which is an interesting question. Could they affect the market? Really? And I'll get into that in just a second. So they dumped pretty quick. The bakkt Bitcoin future started off at like 10,000 immediately, and then people started betting on it going down very, very quickly. So one person says the article makes no sense, but, well, it doesn't not make sense. So that's not what we're looking at here. This comment is actually pretty nice. So people were buying 10K contracts as we started to sink on bakkt futures when it initially started. Sinking to 9,000, he said. So I watched it live, so they're actually overconfident to start. Then the contract switched. If Bitcoin just sank from 10K to 9.6K, I'm not going to buy an 11K contract for a month out. Well, that makes sense as well. So that's not necessarily evidence of people dumping the market. But again, that's just a philosophically sound answer to that. You know, obviously, if it's going down to 9.6, you're probably not going to buy an 11K contract for at least a month out because there's daily and monthly. So future markets usually have the same effect for the most part. They all do. If you look at CME and cboe and the futures and the dates that they picked up various commodities, assets, etc., they just all dump immediately from getting them, because why bet on them going up when you can't get as many when they're going up with your money? So you might as well try to dump the market and try to get it much cheaper, and then you have much more than you would have just initially buying in. It just makes sense. Futures markets usually have the same effect. Anyway, this is because people like money. No one's just going to keep buying 12K Bitcoin on bakkt at 8.5K Bitcoin to prop the market up. They're here to make money, whether good or bad, for hodlers. Again, absolutely gold, Reddit gold, in my opinion. It's just glorious. They're here to make money, whether they're good or bad. And nobody's going to keep buying when it's going down. Nobody's going to be betting on big contracts going up. People just want it to go down. If you're going to be betting in the futures market, it's probably better just to go down, and that way you could pick up more, and it's going to rise right after that, or you could just buy in with everything that you dump. So again, fairly easy, although, you know, to oversimplify it, really, it's just buy a bunch of Bitcoin on an exchange, prop the price up, you know, and long it before you did that. Or the opposite, you could have a bunch of Bitcoin in advance, so you could slowly accumulate it so you don't really do too much to the price, and then set a short when things start to look a little weak in the market, where it would have normally just dipped just a little bit. You take advantage of that and you super dump it, and then people follow and they also dump, so the volume that other people dump is way more than yours, and it goes down, and your short fulfills. It really makes sense. So another article here about some of the Bitcoin drop is the Bitcoin drop caused by 5,000 Bitcoin dump. So Bitstamp appears to be the quasi-patient zero today, as reports relay that a 5,000 BTC sell order swept the market into panic mode. According to speculation, the order was set at quizzically low price, causing the market to correct and initiating a domino effect from market to market through the crypto ecosystem. Why would you do that? While other exchanges weren't as affected, the impact still hit hard, and most reporting a loss for Bitcoin of $600. So again, just this, number one, somebody put an aggregated sell of 5,000 on Stamp. Number two, Stamp poor depth plus algo glitch, and BMX index is 50% on Stamp. Massive liquidation tanked the market, despite all BTC quickly bounced back to 7,000. So they did super dump it on Bitstamp. And this seems to happen a lot on Bitstamp, actually. And the reason why is because I think Bitstamp is one of the aggregators, I guess you will, one of the reporters that BitMEX uses, I believe, for their margin. So again, you can. The reason why this doesn't make sense, in case this doesn't make sense, why it doesn't make sense to anybody, is that why would you sell 5,000 all at once with a market order? Now, this happened a little while ago with Ethereum, when Ethereum reached something like 300, and then there was this massive dump of tens of thousands of Ethereum on Bitstamp. But why would you do that? And the reason why is just because you want to dump the market. You want to fulfill shorts of some kind, your margin trading of some sort. And that's the only reason, because if you're going to sell 5,000, if you're going to hit the market order and sell 5,000 at once, you're not going to get $10,000 per Bitcoin. It's going to lower very, very quickly, especially on a low volume exchange. Now, if you did that on Binance, it wouldn't be as bad, or Coinbase, kind of some of the super big exchanges. But if you do it on a smaller exchange, like if you went to KuCoin, you can hardly sell an entire Bitcoin in, like, let's say the USDC market. So Bitcoin to USDC is kind of a smaller market than even Tether and US dollar, etc. And if you clicked a market order for even half a Bitcoin right now and bought it, you might actually buy some $10,000 Bitcoin, because there's only a few people in the 7,000 range willing to sell, and the rest are all at 10,000, and you're going to eat it up really quick and send the price super high and spike it, and then it's going to go back down. So you're going to lose a lot of money, or you're going to not gain as much Bitcoin if you were to hit the buy order, or a sell order, you're not going to make as much. So there's clearly an intent with that. So anybody that has 5,000 Bitcoin likely isn't a newbie in when it comes to markets or something like that, and they're going to dump it. They're going to dump it hard. So there's a reason for that. If you want to dump the price, there's a reason for that, because you either want to pick it up way lower and you want everybody else to get in on it and start selling as well, or you got some kind of short situation going on with a margin or futures. So another article here, Bitcoin drops 75% of the time before futures expire. So this is another thing I want to talk about, is that last Friday of every month is when CME Bitcoin futures seem to, is when they expire. So it's in your best interest, if you were shorting Bitcoin and you bet at 9,000 and it's still at 10,000, to sell a whole bunch of Bitcoin and fulfill that. Of course, you definitely don't want to lose any money, and you may lose more money by that short not being fulfilled. So you could take it or leave it. You know what I mean? You could say, well, okay, well, if I don't dump the market, I lose money. But if I dump a bunch of my Bitcoin, I won't lose as much money, because I'm dumping my Bitcoin and I'm fulfilling my short. It's in your best interest to essentially manipulate the market. And you can see that. You can really see that. So if you go to like the 3-month, or something here, you can really see, we have to actually reset this. That about the last week of every month, the prices start to go down. So you can see here about August 20th here is when the prices starting to weaken in August. You could say it on other months too. Where it's not necessarily the case, like the 15th here. There wasn't much reason for that dump, but there's clear dumps right at the end of the month. And you can kind of go through the chart the past few months, and there's a clear dump at the end of every month. And, sometimes it's a little unclear, just because, here's at the end of July, and there was a dump, and then it goes up, and dump at the end of June. et cetera, et cetera. So, there's an expiration date, and wild things happen on the end of those expiration dates. And I would suspect if it's low, it's going to wildly increase. And if it's, 12,000, and there seems to be this burning off of volume, et cetera, and it's just kind of sitting there toward about 10 days before the end of the month, or a week before the last Friday, it's going to start dumping as people are going to want to fulfill their shorts. So the question is, nobody has any really evidence of this. You would clearly need evidence of market manipulation, and is it even illegal in an unregulated market in the first place? But there's clear correlation. Bakkt, what we know for sure is that Bakkt did not help the price. So you might say, oh, well, there's no evidence that Bakkt, negatively impacted the price, where I could say at the very least, obviously it did not increase the price. And it's just a correlation, because every time these new futures markets comes out, there's a super dump, because there is a lot of interest to make the price lower so that you can fulfill short, so that you can pick it up all lower and do it again and again and again. And I think once the crypto market becomes more regulated, it's going to take a while because of the non-KYC exchanges, and I don't really support that sort of thing. In a way I do, and in a way I don't. So I think in one way I think, oh, well, no, crypto should be a Wild West. It should be our money. We don't need the government to help us. But then on the other end, you start to see these massive Ponzi schemes, and is it the investors' fault for investing into these Ponzi schemes, or is it the Ponzi schemes' fault for starting the thing in the first place? And regulation can help with that sort of thing. We can track people down easier. We can track crime, I guess. But again, there's more crime in fiat than there ever has been in crypto in the first place. So regulation or not, I think whether you believe in crypto regulation or not, I think it's coming. I think governments don't want the people just getting away with trading and making all this money off something that they don't, taxes and stuff like that. The government's in on it. Governments all around the world are going to start cracking down on it. There's going to be less and less KYC exchanges over time. It's something I believe is inevitable, whether I believe in it or not, in the same way that a lot of politics goes on. And I could be like, well, I don't like this war. And they're like, well, screw you. We're doing it anyway. Who are you? And I'm like, that's right. I'm just some guy. So that sort of thing. It's just not, it doesn't matter anyway. But I hope you guys enjoyed this. I hope it kind of gave you some insight into some of the crypto manipulation that's going on. And it's pretty clear manipulation. Just as soon as, month after month after month before futures expire, there's always some kind of wild dip or wild explosion in price, which nobody minds the wild explosion in price, but everybody minds the dips. So again, find your sweet place in crypto. But that's all I have for you guys. Make sure you subscribe to the channel, like the video, share the video, helps me out a lot. Social media in the description. And as usual, I will see you guys next time.